Bitcoin has hit an all-time high past the $70,000 mark for one Bitcoin. Today I'm going to be talking about what has happened leading up to this all-time high and what is likely to happen afterwards. 2 to 3 years ago, back in 2021, crypto was all the rage, with new crypto projects coming out seemingly every single week. You have Bitcoin hitting highs of $65,000 per Bitcoin and then $69,000 per Bitcoin back in 2021. And then there were the flood of the NFT projects, where there's a whole bunch of new NFT projects coming in and people are buying and selling NFTs. But within the past few years, we have hit pretty much a crypto winter with a whole bunch of projects, including crypto, NFT, all turn out to be scams. We have the collapse of the FTX exchange and also the collapse of many different crypto projects. So what has actually led to this sudden increase of the Bitcoin price? Now, many people believe that this current surge in price is due to the increase in demand of the new spot Bitcoin exchange traded funds, which are these so-called spot Bitcoin ETFs. Now, what exactly is the spot Bitcoin ETFs and how does it differ from the Bitcoin ETFs that we've already had in the past? So this differs from the previous Bitcoin ETFs in that these ETFs are traded with actual Bitcoin backing instead of just trading derivatives of Bitcoin, aka the Bitcoin futures, which means that instead of an ETF that tracks the future price of Bitcoin, this particular ETF directly tracks the price of Bitcoin itself. Some of the Bitcoin fund managers have started preparing for a potential upcoming change in the regulations from the Security and Exchange Commission to allow the spot Bitcoin ETFs. Whereas previously it was always considered something that's too risky for normal everyday investors. In January of 2024, the US SEC has approved Bitcoin ETFs for some of the world's largest fund managers. Now, all in all, they approved 11 different applications, which includes BlackRock, ARK Investments, Fidelity, and many others. The importance of this cannot be understated because it allows investors to invest directly towards something that tracks the Bitcoin price directly instead of just tracking the Bitcoin future price. Now, all of this is done without the users having to sign up for a cryptocurrency account on one of the cryptocurrency exchanges. Since January of 2024, investors have already put in more than $7 billion into these 11 different funds. So what are the pros and cons of investing in the spot Bitcoin ETFs? The main pro is that you're investing into Bitcoin through one of these major financial institutions, and they are less likely, although not completely impossible, to fail compared to a lot of these other random cryptocurrency exchanges. On the other hand, there's a couple of cons to investing in these spot Bitcoin ETFs. One of the main cons is that you don't actually own the cryptocurrency. So because you are not having to set up a wallet, you don't have to deal with crypto keys or setting up a crypto account on one of the exchanges, you don't actually own the cryptocurrency yourself. You're just buying it through a financial institution that has an ETF that invests in the cryptocurrency. Now, if you really think about it, if you have invested in crypto in the past and you only do it through certain exchanges, such as Binance or other cryptocurrency exchange, and you actually store the cryptocurrency on a wallet on their servers, they are basically having control of the cryptocurrency that you purchased. So if you're only buying cryptocurrency through exchanges such as Binance and not storing it yourself, the cryptocurrency exchanges technically still have control of your cryptocurrency. Therefore, this is not significantly different from allowing a major financial institution to purchase the cryptocurrency for you, package it into an ETF, and then you simply purchasing the ETF. Now, the second downside for using a spot Bitcoin ETF from these financial institutions, there is a management fee. Now, the management fee at the moment seems to be around the 0.25% mark for most of the spot Bitcoin ETFs. Now, if you do want to invest into Bitcoin through these new spot Bitcoin ETFs, which one out of the 11 should you actually buy, and where can you actually buy them? Now, I won't bore you to try go through all the 11 different spot Bitcoin ETFs, and instead I'll just focus on the major players in the spot Bitcoin ETF market. Now, there's two main spot Bitcoin ETFs that I could potentially recommend, but please keep in mind that, again, investing in these particular ETFs are still very risky, and cryptocurrency is still very risky. So again, do your own due diligence before putting any of your money in. Now, with that being said, the first one that I would consider people having a look at is the iShares Bitcoin Trust with the symbol IBIT. Now, iShares is an ETF brand from the world's largest asset manager, BlackRock. You may have heard of them before. They manage over $10 trillion in terms of assets, and they are the world's biggest asset manager. Let's talk about the fees for using the iShares Bitcoin Trust. Now, in order to attract new investors for the first 12 months of trading, or the first 5 billion in fund assets, whichever comes first, the annual fee for this particular ETF will only just be 0.12%, and after that the fee will jump to 0.25%. Now, this is about the standard amount compared to all of the other Bitcoin ETFs. All the others have pretty much quite a similar management fee. The second largest spot Bitcoin ETF is the Fidelity Wise Origin Bitcoin Fund with the symbol FBTC. So Fidelity is also one of the big names in terms of asset management in the US, and Fidelity holds the largest retirement funds for the US retirement scheme. So Fidelity is another one that's heavily traded when it comes to their spot Bitcoin fund. In terms of fees, Fidelity is trying to entice new investors by waiving its fees until the 1st of August of 2024. And after that, the annual fee is the same as 0.25%. All the other Bitcoin ETFs are quite a bit smaller than these two ETFs, so they probably wouldn't be my first recommendation. Because when you trade these ETFs, you do want some pretty decent sized liquidity, and you would want to probably go for the two of the largest ones. If you would like to purchase some of these spot Bitcoin ETFs, you could purchase them through today's sponsor, Tiger Trade. Now, Tiger Trade allows you to trade US stocks easily through your mobile app or desktop app. So you can search for the IBIT iShares Bitcoin Trust, and then you can see the chart for the iShares Bitcoin Trust, and then you can purchase the particular ETFs. Or if you're more interested in the Fidelity Wise Origin Bitcoin Fund, you can also find them through the Tiger Trade. If you're a brand new user to Tiger Trade, you can use the sign up link in the description below to get 4 free trades a month and no currency exchange fees for the first $2,000 that you do exchange. You can also get up to 18 New Zealand dollars to use for trades when you set up a new account and deposit at least $2,000 within the first 7 days of you setting up the account. Tiger Trade makes it very easy to purchase shares with their interactive charts and graphs, and thanks to them for sponsoring this video. What should you expect from the Bitcoin price? Now, according to this graph from the Bitcoin Bulls at Rec Capital, the pricing of Bitcoin follows a 4-year cycle with around 3 years of growth and then a halving event somewhere in the middle, followed by a year of decline. The halving event, in very simple terms, means that the yield from mining of the Bitcoin from the Bitcoin miners gets halved. Now, I won't go into the technical details of that. If you want to look that up, you're free to look up some other videos explaining that. But with the current cycle started around January of 2023, and the halving event is scheduled to be around mid-April. According to the crypto analysts, we still have around a month of pre-halving rally before the consolidation period after the crypto halving. And then they're expecting a post-halving rally to reach the peak of this current Bitcoin pricing cycle around September of 2025. And the price that they're looking at is around $150,000 per Bitcoin. Whether or not this is actually going to happen is really anyone's guess.